Hello and welcome to this week's sentiment analysis for the week of August 9th. This is going to be an interesting one because the market is saying one thing from other people describing what they think is going to happen and major points coming next week versus what the market is actually showing in the charts. For example, the current news cycle is reporting the consumer price index, the German inflation and GDP, and the geopolitical headlines that are all going to help the euro increase against the US dollar. Now, right now, that looks like it's supported by the current monthly chart. For example, if we look at the last candle, which is the beginning of August, we can see that that is definitely supported, that an increase in value is something to be seen. Realistically, though, when I look at the actual charts in a whole, and this is the weekly, the daily, and my own trading, I'm not so sure the market forecast based upon news events is going to really proceed the same way that they are suggesting. And I think that's the important takeaway here, in that I think we're going to have another divergence to some degree with respect to what they are forecasting for what the institutions want the euro to go to versus what the actual market itself is saying on the chart. And we're even looking at the chart right now on the screen. There is a big discrepancy when you really look at the order book, and that is the part of the current price to the green line where I indicate my current level of support. I think this is an important factor that needs to really be looked at. So I'm not as optimistic as the market in terms of what they think is going to happen. So now that we've looked at the monthly, let's look at the weekly. Looking at the weekly, we clearly see last week was a very bullish takeoff, a wonderful prospect compared to the 5 previous weeks. Really wonderful in terms of the upclimb. But we see last week, the final candle on the chart, it doesn't show that incredible push. It doesn't indicate what the forecasters are saying. In order for me to believe what the forecasters are saying, I would have expected a week like the week before last that clearly showed an incredible push. Now, if the forecasters had said that last week was going to be a bullish drive, I would have believed it, because when you look at the chart, there's reason to believe it. But when you look at it now, where you clearly see that the momentum is tapering off, I'm not so sure. The other thing that catches my eye on this chart is when you look at the high and the low of last week in relation to the size of the candle bodies. This is just barely out of the way of a doji. Maybe a morning star, but truthfully, it's not that strong of a presence, not that strong of a bullish push, nothing that would even remotely suggest a runaway week. So I don't think that's going to happen. I'm not saying that we might not see some bullish activity, because we do clearly see the bullish activity. We have the closing price above the opening price, and we have a very generous high wick. But the lower wick is what has me really questioning, and also the size of the body of the candle itself. That's where I have to really question just what the forecasters are trying to really say. Because quite frankly, at this point, in my honest opinion, this is wishing, because it's not reflecting the market reality. it's not reflecting what the market is saying on the chart itself. And even just at this glance, it's not even reflecting the order book. There's a little bit of a push above the price, but I don't know if that's legitimate to the amount of hope and wishful thinking that these forecasts are making. When I look at the order book and I look at the buy side, specifically looking at the ranges of where the market shows interest, I personally see more interest below the current price than I do above it. I think this is going to be the pivot point of next week. I think the market is saying that from the standpoint of the price direction, buyers want it lower. Buyers want it to go beneath what the market is currently doing. And I think that's critical. I think that's important. And I think that's a reflection within the market that is significant. From the standpoint of what we are actually looking at, this is where I'm going to be focusing my attention, because that's the part that clearly tells me what the market is thinking. From week over week, I think we are going to be seeing this kind of a market movement. I don't necessarily believe the market is going to push hard upwards. I think the market is actually going to stay within the same range, maybe even stagnate within this range. But let's go to the daily chart. Looking at last week, day to day, and this is really where I think the process for next week holds the strongest correlations. We can see the lower level of last week, and we can clearly see the upper level of last week. Now, while Friday ended in a bullish run, the upper wick clearly shows bearish pressure. Not enough to overcome the Thursday down push that the bears did, because Friday definitely closed over Thursday. So I think this would suggest that there could be a slight uptick next week, but the order book reaffirms that the market is looking for a down push, a down tick. And I think that again goes into the area I've highlighted on the screen, the 1145 range. I think that's a valid area to consider the market in. But really, when you look at the chart, any of this area is a good place for the market to drive down to. There is a reasonable enough process within the order book to suggest where the buyers clearly want to be. So as we progress to next week, that's really what I think is going to happen. I think the market forecasts are over enthusiastic. I do not think we're going to see what we saw the previous week with a huge market uptick that just really went wild. I don't think the order book supports that kind of realism. But share your thoughts. Where do you think the market is going to go? That's the important part. The other thing I've noticed is, with respect to the market, is the number of trades that I actually took last week. So let's actually get to my VPS and look at my own trade history, because that's also telling. Okay, looking at my own trade history, we can see last week, and I'm going to start it roughly from right here down. We see that I only had 4 sell-offs. That's a slowdown from previous weeks. So we can definitely see within the trade history itself that I have a flattening of my actual trading. That is meaningful in quite a few contexts, because it shows volatility. And that volatility shows that the market is indeed slowing down. But I think there's more to that volatility than what meets the eye. And I think for that, a couple of charts should help bring that home. Okay, what we are looking at is my actual trading history over the course of time, where you can see the number of buys, sells, and stop losses. And for the purposes of what we're looking at, I'm going to stay within the range of February of this year to current timing. We can see that my highest day, I had 10 buys. That's pretty good. That was a volatile day. But that really is the point. The volatility for the most part of most of this year has been below 5 trades per day. So let me zoom this in even more. And now we can really get a clear picture of the average in terms of my actual trading volume over time. And we can see when the volatility spikes actually take place, both in buying, the red bars, and in selling, the green bars. Now this is critical because in the buying and selling, the direction denotes where volatility is going. If I have volatility in buying, because I am shorting this currency, that means the market is climbing in price. If I have volatility in selling, that means the market is going down in price. So I can see just by tracking my buys and sells exactly what the market has done historically. So let's back out a little bit. And if we look at previous markets, we can see on May 22nd, I had a high buying volatility, 8 positions. But I also had a high selling volatility of 7 positions. So that's a clear representation of the day being a whipsaw up and down motion. But that's how you can best use this kind of data, to actually be able to see where the market is in relation to a realistic point of view. So even though the day was volatile, it was volatile in both days, or from a pure statistical mathematical approach, a neutral point of view. But that is really how we need to look at the market. So as you look at the year and you see how all of this works out, you can clearly see within a reasonable approach that we really haven't been that extreme in the market. We haven't had a huge rush. And I'm going to put this in a context of looking at this a little bit better. I've zoomed out a little bit, and there is February volatility of 2026. But let's go back. If we look at April of 2025, May of 2025, March of 2025, we can see a pattern. Look at the level of volatility. So in April, one day had a volatility of 52 active trades. That is a significantly high amount of volatility. But that's the point. The point that I think we need to really focus on is that the number of trades in a day over time gives us a picture of the market. Okay, I've reset the chart to look at a close-up where my highest number of volatility trades per day is 80. And as we can see from January of 2026, let's get a region of no trading. Okay, I went past. Okay, looking at the market right now, we can see we are well below the volatility of my highest trading. We aren't even close to the average. So the overall Euro USD market is substantially flat compared to previous markets. And when I say previous, I mean literally previous. And this is the same exact strategy I have been running with no refinements for 2 years. Again, we look at the chart. We can see areas where we have more volatility than normal, but nothing at all compared to previous. Case will now in August of 2025. Okay, April of 2025, May. Well, April to May, April clearly shows we had volatility. We clearly see the amount of buying and selling significantly above the average. And let's put a rough average of right about here on the screen. So you can clearly see, even though my line is definitely not straight, the market is well below any level of reasonable average for volatility. We are flat. And looking at April of 2025, we can clearly see at 50 some odd buys and sells per single day exactly the kind of volatility this market can experience. So we have a clear, visible point of view. And I think that's the important part. I think that is something that we need to take as a part of the overall worst case scenario when we look at our trading strategies. So let's get back to the chart and really finish this up and figure out what next week is going to look like. Okay, looking at the monthly chart again. Given the actual historic reference of Euro USD, looking at the order book, looking at the candlesticks, I think we need to continue for the range we are in. I don't think the market is going to break. I'm going to say probably this area that I'm highlighting. We're certainly not going to break the upper yellow boundary I've highlighted, as I just don't see any evidence in the order book at all. If there is any kind of hit that goes this far, personally, I would see that as market manipulation, because the buy-side order book just does not show any of the traffic to suggest any level of upward push. If you can make an argument for a buy-side push, really, I think that is going to be right here at best. I think that is going to be the only real place that a buy-side order book push is going to occur. I think, as I highlighted previously, this is it. A small window above the current price, but certainly still well within June's shadow. And I think that is the point we need to take away from this. I don't see evidence yet in the actual market that August is going to break the shadow of June. I could see that it's going to potentially climb based upon what it is now. But I don't see a runaway market. I don't see a bullish drive. I don't see the kind of situation that I'm highlighting on the chart, or even a month where there's going to be a complete total drive upwards. The evidence just isn't there yet. Maybe as the week progresses, maybe if the CPI or the German GDP inflation rates, maybe if that significantly has an impact, but right now, everything I'm reading just doesn't say that. So trade smart, trade safe. Let me know what you think in terms of your own trading. How do you see this progressing? If you like this kind of content, please hit that like button, share it with somebody you know, subscribe if you're not. Thank you for watching.